Paul Lapis here with Remax Hallmark here in Toronto, and I'm back this week with another market update. And a couple things I want to talk about. One is the kind of housing policy changes that came out of the federal budget. And the second item is the inflation numbers from last month. So looking at the federal budget announcements, housing was a kind of a key priority that came out of that, and that was to be expected as the housing minister and the federal government have been dropping hints all week about policy changes that they're going to make. One of them that caught us off guard was really the change in the capital gains inclusion rate. So what is the inclusion rate? What is changing, and how will that affect homeowners? Well, starting with what capital gains is. Capital gains is the difference in the cost of an asset, so like a home, investment property, cottage, to the difference in which it sells for. That appreciation is considered capital gains. Under the current policy, the inclusion rate is 50%. So you take 50% of that profit and add that half of that onto your personal income. The new policy aims to increase that inclusion rate from 50% to 2/3. And for individuals, that's 2/3 over 250,000, and for corporations and trusts, that's the full 2/3 to the full capital gains. Primary residents are still exempt, so that's not changing. But if you are selling an investment property, a cottage, and your gains are over 250,000 since the time you purchased it, then you are going to be paying higher taxes due to the higher inclusion rate at 2/3 instead of 1/2. Coming according to the federal government, 28.5 million Canadians are not affected by capital gains, or going to be affected by capital gains, and 3 million will have under 250,000, so under the inclusion rate. So this policy change is to target the 0.13% of Canadians who typically make over 1.4 million in income. It'll definitely impact their capital gains. But nonetheless, the headline alone is going to make investors and owners of multiple properties nervous, as many Canadians hang on to properties for long-term gains that are a rental property, a condo that they purchased originally. These going in the future are now going to have to take into consideration higher tax rates when they go to sell. The second major policy change that people are talking about is the increase in the RRSP contribution for the home buying plan. So for first-time home buyers, they're increasing that amount of taking $35,000 from your RRSP to contribute towards your down payment, and they're increasing that to $60,000. So that's a significant jump, and that's for a couple purchasing a house, that's jumping from $35,000 each to $60,000 each. That's going to make a big difference in couples' ability and people's ability to put a down payment on a property. And the next change on that as well is that currently, as it stands, you have to start paying back your RSPs within 2 years. They're now extending that to 5 years. So those are two big changes for first-time home buyers to get more first-time home buyers into the market, as well as trying to tax with the capital gains inclusion rate, trying to tax the wealthier individuals in Canada. Jumping into inflation numbers, well, the war on inflation lost some progress as March numbers ticked up to 2.9%, from 2.8 in February. The biggest kind of contributors to that was gas prices, up 4.5%, and as well as shelter costs. So shelter costs remain high, even though it's relatively stable compared to last month. It's still at least 6.5% up from this time last year. Looking at that, breaking that down, interest costs make up about 25% year-over-year increase, and that's about stable, if not kind of slightly down. And rents at 8.5%, that's slightly up. And the cost of building is down. It's at -1%, but it's down less than it was in February, so it's kind of started to creep up a bit. These are all things to watch for inflation numbers and economic data to see what the Bank of Canada is going to do in June. That's the next rate announcement. Stay tuned. I will provide more kind of updates like this every week. If you have any questions, feel free to leave a comment or message in the comments below. Thanks so much.